Okay, let's get into the stock market technical analysis. It's 2 o'clock Eastern time when I'm doing the video. And I want to just go through, some basic charts and trade ideas. If you guys are finding value, minimum you can do, just click the thumbs up button. Leave a comment, if you have a chart you want me to look at. Dropping it in the comments. I do look at those comments, and if I see something interesting, I usually will, reply back or post a chart or include it in a video. So feel free to do that. Let's dive right into it. Triple Q is kind of picking back up today where we left off last week. On the daily chart, there's still just kind of this float higher, this grinding float higher where the volumes, we're really seeing pretty low volume, but we're seeing kind of this just buy the dip, float higher. It's nothing really impulsive, but that's it. That's really what's continuing. We're still below the 200-day moving average there. Here's how I think what's going to play out. We've got a resistance level just overhead at 500. The big, it's about 500 on triple Qs. I think we're going to hit it on the triple Qs this week, but I don't think we will close. I'm still thinking we're going to close on the weekly chart at the 200-day moving average or below it, okay? So intra-week, I can see us kind of, maybe tomorrow, we might get there tomorrow, I can see us popping up into that 500, but by the end of the week, I would be looking for a close basically at current levels or below. So that's what I'm looking at. If I go to the weekly chart, you can see here, last week, we closed right there at the 200-day. And so I think intra-week will be up here, but we're going to close back below the 200. And it's ultimately, that's something I'll be looking for. If I see that, that means that the 200 is still going to act as major resistance on the weekly chart, which means the following week, could even be this week, but at some point we'll be starting to sell off again. So that is the way I'm leaning, a little higher intra-week, only to get sold into and close below the 200, either right at it or impulsively below it. I don't know about that one. Back to the daily chart, we'll look at the Mag 7s. Again, they're selling Apple, which is kind of interesting. You can see here on the daily, they're, continuing to sell Apple. Earnings is out of the way, and they've just been selling it. Nothing really that crazy, but there is a downtrend line. We're kind of back below that. And yeah, just in general, there's just nothing really that interesting. Microsoft is at resistance. You can see here on the daily resistance. We're not actually there, maybe a little higher, but we're close to it. So I would look for, that to hold as resistance and really look for some sort of a reversal, likely going to come with the rest of the market. And AVGO, kind of interesting, at resistance. You can see here, Broadcom on the daily chart. Look, support. All right, support. There's support through here. Reaction there. There's one. Lots through there. And then it broke, so that's a sell signal and a back test. That's an objective short right there. All right, so it was, it's down slightly today, but still close enough in the vicinity where it's an objective short, looking for the next leg lower. All right, the next leg lower means as a swing trade, looking to take out these lows. All right, those lows, and head down to the next level of support, which is about 119, 120-ish, somewhere right in there. So I like that one as a short. And yeah, let's get off these Mag 7s because there's really no change, but it kind of showed you what I'm looking for there. This one, NTR. So again, both of these NTR and MOS are the two ag commodity long trades that I've really liked, but I am looking for that pullback now. So personally, I've exited those positions, and I'm looking to buy the dip. And we're starting to get it. We'll look at the hourly chart. You can see we basically have this rising trend line with negative divergence on the hourly, and it's starting to break. So I'm looking for probably a move down to 54-ish. If I go to the daily chart, I'm actually looking for a little lower. I'm really looking for actually about 51.22 on the daily and maybe a hit of those 200-day moving averages somewhere down there. And then from there, I like it as a long. So I'm not short this one because longer term, it looks like it's going higher. again, remember, if you look at the weekly chart, we had this big bullish falling wedge with bullish divergence, and we just broke out of it, back tested, and we're running up. So this, I'm really just looking for kind of a pullback, 54ish, maybe down to 52. Actually, I don't even know, 54 for sure. That's probably where I'd maybe look to start re-entering with an add at 52, not below, for the next leg higher, which, my final target for this is still up here at 69. It's about $69 or so. And we got about halfway there. So just looking for kind of a little pullback on what seems to be an uptrend. Same with MOS on that one. The 10-year Treasury interest rates are rising over the last 4 days, continuing to rise. Nothing like that's really technically changed, but we did hold support. I did talk about that being support. We just hit it, and we held it like a champ. So until that goes, that's support, and I'm continue to look for rising interest rates. And so, yeah, we've been chopping sideways really recently, but I'm looking for over time interest rates to continue to rise. If I go to the weekly chart, again, I'll point this out for anybody who's new on the weekly chart, and it's a messy chart because I've marked it up a bunch, but this is 1981, the top of the last really end of the top for the interest rates, and then they've been falling since 1981. So anybody who's been investing in the market since 1981, whether that's stocks or real estate, they've lived under a falling interest rate environment. And I think that's changed now. We saw these COVID, this is QE1 during the great financial recession, or whatever they call it, QE1, 2, Operation Twist, and there's COVID. So those were the Fed artificially bringing the interest rates down below the normal market trend. And then boom, we've spiked above that. That trend has been broken. We're no longer in a downtrend in interest rates. Now, that doesn't mean that interest rates can't fall, because this is, again, 1981. We're talking about decades worth of price action. So we can easily see interest rates maybe backtest that trend line. But over time, and likely going to take years and years, I would expect interest rates to continue to rise. So, yeah, that's big picture stuff, but just, want to kind of highlight that. The SPY, the S&P 500, basically sitting right at the 200, so no technical change there. As bullish as the rally has been, again, if you've been with me, we went long down here. All right, I caught that huge update on a long trade, exited my longs pretty much on that day, and then I've been scaling back into shorts, basically right in here. So we were long down here. All right, we were short up here on that big breakdown. I didn't short the SPY, shorted the triple Qs, but just giving you guys an idea of when this took place. Shorted right there, went long down here, and started to short again right here. All right, and waiting for the turn. All right, no guarantees we get it, but it's objective. We're at the 200 days. We've got big overhead resistance up about 575.50 or so. There's big resistance, and this is an objective area where I want to be short for the next leg lower. All right, if we don't get the next leg lower and we continue higher, maybe we're going to go on to make all-time new highs, and I won't ride that out short. I'll just look to stop out, and little rise there, that's kind of my risk. But if I'm right and we get the next leg lower, the reward is all the way down to make new lows. So risk reward is good to be short here. I'd rather be short than long. And yeah, that's kind of how I'm positioned. I'm shorting the triple Qs, not the SPY, but I know we have lots of people who like SPY analysis. In IWM, the small caps, pretty similar to the SPY and the triple Qs. We could go up a little more here. We've got resistance about 205.50, and then you got the 200 days and this downtrend line. So I've got kind of like a zone of resistance up there. So maybe a little higher there in the IWM, which, it's about 3 up to about 5% upside. And then boom, next leg lower is likely. So the downside potential, I've got a big trend line down here. It's about 15-16% downside with about a 5% upside. So 3-to-1 risk reward ratio. Again, not favorable to be taking new long positions for sure. And if you are long, maybe raise stops, because it's definitely, we've got overhead resistance. Someone asked me about Palantir, so I'll just kind of point out what I'm seeing in this one. We're at like a double top basically. Here's your former high, and we're basically right there with earnings coming out. And we have, as of now, it is negative divergence because we've made an equal high in price, but momentum is making a lower high. So that is negative divergence. And we have earnings coming out. So it can go either way post earnings. I could see making a new high in price, putting in kind of a full-on divergent high, where you maybe backtest this trend line right up here. If you look on the daily chart, I've got resistance, or this was former support. So I could see a pop up there, maybe open the day, or maybe just after hours price action, I don't know, up here, putting in a divergent high, and then the sellers show up. And so, or could just gap down. All right. From my perspective, the upside's limited. A move up to that trend line's about 10, 11% to hit that trend line. That's kind of par for the course with this stock. It's pretty volatile. So a move all the way up there would be a complete backtest of the trend line, putting in a divergent high most likely, and the sellers would likely show up, and that would be a very objective area to short if you haven't done so. There's no guarantees that's going to happen though. So that's kind of the upside I see, and then the downside, I think there's quite a bit of downside on this one. Definitely back down to the lows, but I think we probably could even take out those lows, head down to about 45 or so. So risk reward about 11% upside, and if we just go back down to the former lows, it's about 47% downside. So about a 1 to 5 risk reward ratio. That's very favorable for a short, although again the upside's about 11%. So position size, accordingly, if you are just loaded into this thing and you're short and it goes 10, 11% against you and you can't take that pain, you're probably too heavy in that position, because this thing's volatile. You just don't need that much of a position to profit on this. If I go down to the hourly chart, you can see we've been rising in a bearish rising wedge, all right, on the hourly for the last little while, putting in some negative divergence. We got some there. We definitely have negative divergence on the hourly. So it signals that we're going to break, although that could pop up, run a bunch of stops in the, tomorrow, and then the sellers show up. Or it could just gap down. So I'm actually short this one. I prefer to be short. Again, talked about the upside, but this could easily gap down in a major way. And, I don't want to chase a short if it gaps down 20%. So, that's what I got on that one. Netflix is kind of interesting. I had an alert set here on the daily chart on this uptrend line, and that actually triggered today when it did break that trend line. So on Netflix, you've got basically an upward channel, big upward price channel. And we've kind of been building this negative divergence on the RSI. Not really there on the PPO, kind of there, not really. But definitely have this uptrend line here, and I can show you on the hourly. And then on the daily, this is the resistance line that I have. So it's kind of at resistance on the daily there. And then if you go down to the hourly chart, been kind of walking up this trend line here on the hourly, and then it broke today with a gap down. So broke. The dip buyers have stepped in and bought it, but the trend, that short-term trend on the 60-minute chart's broken, and we're kind of at that major resistance on the daily with that break in the hourly uptrend line. So minimum really is, I think, a move down to the bottom of the channel. Let me go back to the daily. Yeah, somewhere down there, about 933.20 ish. It depends on how long it takes to get there. This could kind of drift lower. The buyers will likely be stepping in to buy at some point. The buyers will continue to buy the bottom of this channel until that's been broken. All right. So just expect buyers to be trying to keep it within that channel. So from my perspective, I think it makes sense to short for a move down to the channel, cover the short, and then wait for the channel to break to re-short it. That would be the next sell signal, a break of that channel. Gold, GDX, rallying today. We did hit that first level of support. I had that right there. We hit that last week, and we're getting the bounce off that support. So there's a gap to fill up here, about 50. Where's it at? Yeah, about $50, I guess. There's a little gap to fill. That'd probably be the max bounce. I'd be looking for it to maybe bounce there and then continue lower. Still looking for gold to, I've talked about GDX, hitting that 200-day moving average, wherever that's at. That's kind of the goal or the target on that one. So, yeah, I think, maybe a little more upside, run into resistance, and then continue down. That's all I have for today, at least for this morning. Not a whole lot of change. So drop me a thumbs up on your way out. Check out the private member group. Link in the description below if you're interested. And then I will catch you guys on the next one.